flood insurance quote, and you're like, you know what, this looks like a better option for me. I'm ready to make the switch, but I've got to switch from this other carrier. So I'm here with our content manager, Jacob, today, and we're talking about how do you actually switch carriers with a flood insurance policy. So what's the question we're actually getting here from customers, Jacob?
Okay, so our first question says, can you tell me about cancellation reason code 26, and how do you handle the client who wants to cancel their NFIP policy midterm?
So when you're dealing with the NFIP policy midterm, there are a few cancellations you can do there. It's usually if your mortgage has been paid off. Some will say duplicate coverage, but duplicate coverage doesn't apply because they don't recognize private flood insurance right now. It could be that you had a flood zone change. It could be that you refinanced and sold, mortgage and bought another one. So there are some stipulations there, but you can't just traditionally cancel a national flood insurance program policy in 2025 just to move to private. So you've got to understand that when you're looking at these different options.
So our next question here is about escrow coordination. It says, when switching providers, how do you work with lenders to handle escrow requirements, and what challenges have you faced?
So will we work with your bank when it comes to making adjustments to your escrow and setting this up? It's a question we got here from our content manager, Jacob, from customers just like yourself. And yes, we do. We coordinate with your bank to help them get this flood insurance paid if possible. Look, you may have to pay out of pocket. We have seen that before, and then they can reimburse you, or they reimburse us. So there's some coordination here, but we coordinate with mortgage companies every day to help get this in place for you so we can help get your property protected.
Okay. Our next question here says, when would you recommend switching midterm versus waiting for renewal?
When looking at midterm, you want to look at a few things. First of all, let's look at private. If there's no minimum earned premium, that means you could be able to switch at any time. If there's a 25 or 50%, means you could be out that plus fees and things like that. You want to pay attention to that. The National Flood Insurance Program, you really just want to wait until renewal, because other than that, it's next to impossible. When people tell you it's not, we've seen so many people lose thousands of dollars because of this. Because then a private flood insurance company charges them 25%, they can't cancel. It just creates a bad experience. So just think private, I got a fighting chance.
Okay, so our next one here says, does the NFIP issue refunds if you cancel midterm?
Only if it's for something like a mortgage, something that, yeah, they do prorate it typically on the base premium.
Okay, so our next question also says, what's your process for ensuring no coverage gaps if you switch provider?
So what I want to make sure of here, what they're asking here is, how do you line up the dates here? You always want to make sure if your policy ends on the 31st, start the next one on the 31st, just to be on the safe side. If you're ever allowed by day, it's fine, but you don't want to miss it the other way around, because just one day in lapse coverage could cause you not to get your FEMA policy canceled. It could cause your bank to force place coverage, which could cost you a lot more money. So make sure to line those dates up correctly.
Okay, so now I want to take a minute to kind of go into the relationship between you and the client. So our first question under this one says, can you tell us how you would handle it if a mortgage company resisted a provider switch?
So we see mortgage companies resist private carriers all the time. We have to show them the bulletin that they can meet expectations, or they're like, hey, we've already paid this out, we're not going to pay it out again. And that's where a customer may have to pay out of their own pocket and get reimbursed through that. So it potentially could happen to you. But that's how we work with property owners like yourself and the mortgage companies every day.
Okay. So our other question here is just, it's a pretty simple one. How do you walk a client through it when they already have a policy present, but they're looking at making a switch? How do you walk them through that process?
So when we're walking that customer through making a change on their policy, we've already got each policy. First of all, we're looking for any gaps in the existing policy that we can help them adjust. We find that about 30% of the time these policies are written wrong. Maybe it's a wrong foundation type, not enough replacement cost. In fact, about 70% of the time, we see the replacement cost is not used correctly, which means when a claim happens, the correct amount's not going to come out. And that's why we spend so much time looking at that to make sure when a claim happens, you are covered.
Okay. So our next question here says, how do you approach switching coverage for a property if it's a high-risk property or if they already have flood claims?
Typically, if we're looking at something with flood claims, we're trying to figure out how many claims. It's just one claim, maybe $20,000, $30,000. There's a few different options out there, but if you've had multiple claims, typically the National Flood Insurance Program is going to be your best option there. And look, don't try to sneak these underneath the rug, because they will find out there's been flood claims, and when you have another one, it may not be covered.
Okay. So our next one here says, what's different about switching flood insurance for commercial versus residential properties?
There's really no much difference there except some of the bank requirements like loss of use. If you switch to private, they could require loss of use. If you switch to private, they could require the full replacement cost and coverage compared to the National Flood Insurance Program, who only offers $500,000.
Okay. So now we have someone asking, how do you manage switching providers for clients with properties in multiple states?
So this, what happens is maybe you're dealing with different properties in different states. You could have these on a blanket policy, but when they're in different states, that's kind of rare. But what we try to do is kind of coordinate these on the same effective dates as you're getting all these changed. I think if you're doing business from Puerto Rico to Hawaii, we do make that as smooth as possible.
Okay. Okay. So our next one here, we're going to move into more about the market, actually. The first question we have is, when would you recommend surplus lines flood coverage, and what are the trade-offs?
But the trade-offs are easy. It's better coverage, more coverage, could be cost effective, but then you have to think about risk versus reward. Are they going to cover my claim? Are they going to skyrocket my rate? Because they don't have to follow the same state laws like traditional companies like a Travelers, Allstate, or State Farm do. And because of that, you may not have as many protections as a consumer. That's why you may be having to sign that due diligence form, usually for each state. So you just want to think about that when switching potentially to a surplus or non-admitted private flood insurance policy.
Okay. So now we're going to move into industry trends. The first question here says, how has FEMA's Risk Rating 2.0 changed the process for switching providers?
Actually, the Risk Rating 2.0 from the law standpoint and the definition of the policies has not changed yet in 2025. Soon, hopefully will, which potentially could give us more coverage, could allow us to cancel policies midterm for a private. So the sooner they can get that taken care of, the better. But right now, Risk Rating 2.0 has not really changed those processes at all.
Okay. So getting here close to the end, can you tell us, has there ever been a time when you tried to switch providers for a customer and it didn't work?
Yeah, especially right when Risk Rating 2.0 was going on, when we had the Homeowners Insurance Affordability Act back in 2012, the Big Waters Act, is we would try to switch people. It would take FEMA months and end up not switching them. Then they were out 25 to 50% of a private company. So, we even saw a situation where, not with us, but with someone else, where a customer was out $10,000.
Wow. Okay, so our final question here says, what would you do if a flood occurred while a client was switching providers?
So we actually have had this happen a few times. And what you need to do, work with an insurance agent with integrity and disclose before you've gotten that policy set up, because there could be an issue where they're not going to cover that. When a renewal comes in, they're going to not renew it because you weren't honest.